All right, now we're streaming. Sorry about that, everybody. I was recording instead of streaming, so but okay, we're good to go now. So go ahead, Richie.
Okay, so looking at the 4 hour chart, I was looking at it last night, and I realized when Ari rising that rising wedge, right, pattern. So yesterday when I asked you about that change of character that formed on that higher time frame, also I put together like just a support a trend line on the forward chart. But I realized that we can still have a continuation of that rising wedge extending to maybe, let's say, the weekly high. Do you think if we continue with small pullbacks extending, to bullish moving up to the weekly high, we can have a major breakdown forming that wedge?
Yeah, I don't think she looked at it from the 4 hour chart. The 4 hour chart's just giving me a channel. Um,
Okay, okay,
right
okay.
here, there's no wedge pattern here. Um,
So from the, let's say, let me go with the day, from November 2nd with that red candle, we cannot put a trend line there to form a wedge from November 2nd to November 9th with that using those both candles to form a wedge. I mean, not a wedge, to form a trend line, sorry, at the bottom.
well, my trend, I'm down here from this is the date my daily channel. This is just channeling straight up right here.
Okay, I
Um,
see. You're looking.
yeah, this right here is on the 30-minute chart. I'm trying to find the wedge. Uh, yeah, I just don't.
It seems like I'm looking at something different, or I'm overlooking at something.
I mean, if you want to, do something like that, right? That's a rising wedge, right? So we're at the top.
Okay,
We're at the top right now. So this could come down. Yeah, the wedge can just go as long as it wants, right, into December before it does
okay.
something.
Before it does something, okay. So what you're saying is also, in order to put together that wedge, you have to come from of that um the bottom of that range, which would be, let's say, all the way down to 409.
Yeah, you remember wedges just show support and resistance.
Right.
You
Okay,
let you
okay.
let the chart you let the chart tell you what it's doing. You don't want to. I see some people, uh, do like some from this low to this low, but again, this is not support because see it breaks through all of this, right?
And I
So
think that's what I was doing. That's what I
yeah,
was doing.
and vice versa. Your resistance lines, you don't form a resistance line right here because that breaks through all of this movement right here. That movement's there
Okay,
for a reason, right? You go from the highs. This isn't the high. This is the high, right? And there's your downtrend line right there. Okay. Now you could take these two lows right here, depending on what's going on back here, but you could come like right here and there's your wedge pattern, and that's bullish, and sure enough it breaks, comes down and try to meet the point, and then, you know, it rips up. So, yeah, I always with your channels, right? That this is the channel line, this is the support line. Okay, so the support line always or flipped for bearish. You don't break the move. You have, this has got to be the lowest point. Right now we got this ghost wick here, you know, and I will usually ignore those. Well, not ignore them, but then what I'll do is I'll do a secondary trend, you know, which is pretty close to it, but I'm always aware of them. So, but your support or your resistance line, not the channel line, never breaks the movement. That's the number one thing that I see, you know, I don't want to say amateur, but inexperienced guys doing is they have trend lines that break, that have breaks in them, and the purpose of a trend line is to show the absolutes. So because that's the resistance, if or the support, if you've got support right here, but you have, you know, some stuff coming, you know, down here like this, and you just put a line right through it. Well, here's, if this is support, then what's this right here? This is the support because it bounced from there. So that's the whole definition of the trend line and why you make them. So so you always got to be careful of that, because boy, you can really get messed up by having improper support and resistance lines.
Okay.
Yeah. Now, if you're doing intermediate stuff, just a certain move right here, you could, you know, you might have something like this. So let's say none of this is here yet. You know, you have this downward wedge, and so you have you know that the lows right there. And you're like, okay, we've got a wedge pattern going. Comes back up here now. You know, it definitely could have done something like this, come all the way down, then come up, try to meet the point, and then boom. You know, but it should have been aware of that because you know that's telling you that there's a wedge forming. Now from here, it just, you know, it broke. Tried to, you know, it broke here instead of, you know, another move down. See, that's it. You don't know where that wedge is going to break, and you don't know. You got a 78% chance it's going to go to the upside, but it could definitely, you know, gone down. Now, I mean, to tell you the truth, right here off of this, you know, I would have gotten puts right here. Why? Because I'm betting on it's going to make one more move down before maybe it breaks, right? So, but I probably wouldn't. Well, maybe my stop would have been right there on that candle right there, but. And funny, it came right up. See, then I would have lucked out and I would have made money on that one. But so that, yeah, that's why all that stuff's so important. What else do we have today?
Said you were going to go over some things that you learned off that new charting that you bought.
Yeah. By the
Are
way,
you ready
everybody,
or go ahead?
I'll go into it a little bit. I'm still trying to filter through some videos to help everybody out. But yeah, the tick, what we're using is the tick and the ADD and the volume differential, VOLD, the VOLD. And then what I just recently found was the equal weight off of the ADD. Now, we could get really technical. There's the equal weight, the ADD off of the NASDAQ alone, and the the whole market, because sometimes the NASDAQ's more volatile, and that whole thing. So you might, I know some really good traders that do that, but for me that's kind of okay. Butterfly, now you're paying attention to two to see which one you want to be trading. So for me, I don't do that. But you could also set it up for the NASDAQ also, and play off of that. So but the equal weighted, though, see, that includes that's going by using the Magnificent Seven, if that's what you want to call it, to where that's more, it puts more weight, equal weight to it, and it's a really decent indicator. So and then you have the cumulative, right, value off the tick. And so where to start? I guess I'm kind of rambling, but these ticks right here, you have certain values. You have 1,000 that's showing exhaustion of the move, and 1,000 down. Okay, and then what you want to notice is that the zero line. So most of the day you see it mostly above the zero line. So that's telling you got a positive day. All right. Now, of course, that's, who cares? It's after the fact. You don't know that at the beginning, because boom, look, you're really negative right here. But in connection with this is your cumulative tick. Now, what I pay attention to is above 6,000 and below 6,000. Okay, and obviously the zero mark. Okay, so now what is the tick? First of all, all it is distribution. All right, you're positive versus negative. And I like to use it on the 5-minute. A lot of really good traders go solely from the 15-minute. It takes out more noise. And it's showing you the amount of buying, selling pressure. So, when you're up here, that's telling you it's exhausted. But when you're seeing a move like this, right, and here is exhausted right here, right? So you're like, well, that's the end of the move. The big white arrow, right? That's telling you it's exhausted. But if you notice, look how far, we don't even get down to, okay, the major levels are 600, 800, and 1,000. So when you're ranging for all day long, it's usually bouncing between 600, and that's it. Those, when you notice that, that's when you go out and mow the lawn. Yeah, you're done, But when you start getting heavy movement, then it's fun, right? And you're playing the exhaustions. But there's a science to it also. right? So you could wait just for the big exhaustion arrows. These are not exhaustion arrows, okay? These are just sell signals that I pay attention to, but not as much as these, and these don't happen all the time. See that? The big exhaustion arrows are all white. They're not green or red. They're just white going down, white going up, right? So when you're noticing all these, pretty big exhaustive moves right here constantly, that's the sign that it's not the end of the whole move. It's just the end of this particular move in the overall move going forward. So when you're noticing that, now what you're paying attention to is, okay, this came down to 457, right? And all of a sudden here, boom, 457 comes down here. This is telling you where to buy the dips, right? So I did that Thursday, I think. I perfectly timed the high and the low of like three dips, where I was adding here, not getting out. So that's important to, this is important for that. And then also, you're looking for divergence patterns. Okay, so right here, the move is going down, right? But then, come on, whatever. Okay, so the move's going down from here. Well, the move's continuing to go down, but then look what the ticks are doing. They're going up. Okay, that's the sign of, there's buying pressure coming into this, right? So here you have a double bottom from here all the way up. So the sellers, they can't push it down any lower than this. That's the sign of, strength. So that's how you look at with the tick. Now the tick, okay, a lot of the indicators, you could use it on the 1 minute, you could use it on the daily, and usually indicators are better on longer charts, right? That's why I love playing the daily, because the signals are so much better. The 4-hour chart, 1-hour chart. But the tick is only for intraday trading. All right. You don't want to come back and look at the daily chart and see what's going on with the ticks. So just to let you know that. And then we have the cumulative tick again. Basically, we hovered, all morning long. We were below 6,000, but then boom, we break to the upside right here, right? And you just could have easily caught that move. Going along with the information right here. Oh, here's the divergence pattern. We broke above 0. That might be a good sign, to get in. Now this is just going off of the tick and the cumulative, right? But then you have the volume. Okay, now this is the volume differential. It's the volume going down divided by the volume going up. Okay, the ratio. Now with the tick, it doesn't care about what happened yesterday. All right, this is just for today's information going up or going down. Okay. The volume is read by it does consider yesterday's close. Okay, so here's the I have the 0 line on, and we broke down below yesterday's close, and then we came above. All right, so the best way to kind of understand it, because the VOLD and the ADD are connected to yesterday's close. So let's see if I could find it here real quick. Come on, come on, come on. No. There we go. I think this is it. Okay, so it compares the total volume flowing up into stocks and down stocks based on yesterday's close. Okay, so if it's under yesterday's close, whether it's going down, it's negative. Up or down. If it's below the close, it's okay. Here's the close. So if it's going down, it's negative. If it's going up, it's positive. Okay. Even though it's still underneath yesterday's close. Now you have the advanced decline. It compares the total number of stocks that are positive and negative on the day based on yesterday's close. So here it's going up, so it's positive. But yet in the advanced decline, if it's going down, it's still considered positive because it's above yesterday's close, right? But if it's going down here and it's below yesterday's close, it's considered negative. And if it's going up, it's still considered negative. Okay, so you get the difference. It makes sense, and then 5 minutes later you'll forget. You just have to pay attention to it. So, but the volume here, if you notice, we started below. Let's see if I have it synced up. Yeah. So right here, at the open, we bounced back up and then we broke below the zero line, right? Now the important, I have levels of whatever 300 billion, whatever. I think it's 300 million, 30 million, and then I have the cumulative volume on this also. Okay, so but as we break above the zero and we break above this line right here, there's your move up. I'm just watching this continually go up. So that's something that you always want to be aware of also. Okay, now this is your market breadth. Okay, this indicator, I think I'll be given links and everything like this when I'm done with everything. Okay, this is I think this one you have to pay for, but this is really, really important. Okay, because when you're in bullish territory, you want to wait. If it's the ratio is like 2 to 1 to 1, 1.3 to 1, anywhere in the ones, you're kind of in a range area. All right, so it's really helps you if you're conservative. You're just not getting into anything. All right, it's just going to be a ranging day. But when you start getting into the twos, right, and this could go into the fours, fives, that's telling you that there's a lot of strength in the volume, right? So that's what you're looking for. Now you have again the NASDAQ. Now the thing is about this, it gives you the market breadth for the stock exchange, the NASDAQ, and the Russell. Okay, now if you notice, the Russell's red, it was negative, right, for the day. That's something the Russell, but the most important thing is these two as far as they should be in sync. Okay, if the Nasdaq's red and the Nissy's green or vice versa, the market's not in sync, and you're kind of in dangerous territory, right? You could be ranging, you could get faked out. But when they're both green and they're both, in the twos, um, it's a good day. Or if they're both red, it's a good day to get puts, right? Now the weird thing is about this, it has a character where in the upside, in the bullish moves, you're looking at the market breadth of 2 and above, right? But on the bearish side, you want to wait for it to get to the 3 to 4 area. Some conservative people wait for it to get in the 5 area before you really trust a bigger move, consistent, all day move to the downside. All right, so you have to kind of write a note down, sticky note or whatever, 2 over 1 for the bullish, and I would say 3, more aggressive, 3 to 4 for aggressive. Now, just because it's -2, that doesn't mean you can't be bearish, but you're going to be a little bit more conservative in how long you stay into something versus just holding on for a big move, for the whole day. So that's what we're looking at with the volume. And then again, the ADD line. The most important numbers on the ADD obviously is 0. And then you have 1500, 1800, and 2000. Okay, so now today we started way up here, and on the ticks, let's see, we started right off the bat in exhaustion, right? So if you saw that right away, if you're super aggressive, you would have gotten puts right off the bat, right? And you're looking at volume here, or your ADD line, you're up pretty high, right? And you just start seeing it. But look what happened. Didn't get close to 0. That's right? We're staying above this. Remember, this is the whole market. And it's staying above the 0 line here, and it starts just start going up, right? So overall, we started pretty high. We came down, but didn't get close to the 0 line. So overall, you're feeling bullish on this. So now, well, okay, what's the deal with these areas right here? If we get up here, especially if we get up here early in the day, above 1500, or if we start up here in this area and we don't break below this, this is like you're looking at melt up, 1.5 to over, to 2% type of a day. So this is going to give you a good indication of a big move to the upside. So you definitely want these on your charts. Now, there's a lot where it could start up here. It climbs up to 2000, and then if we start breaking below this, then you might do a fade. Where it's going to be back testing, from the big move and everything like that, and then you might have a big run down. Like here's the day before, we started up high, right? Just about the same time here as yesterday. This is 2 days ago, Thursday, and we just came down. Look at that. As soon as we broke below right here, she's going down, right? Now there's something that again I'm having a friend work on is divergence patterns, because I think this double topped, if I remember, and the SPY was still kind of going up, so that there's a divergence right there, and then this started coming down and the market still kind of going up, and then boom, she just followed the ADD, right? So divergences are really important with the ADD line to pay attention to that with the market. And then so that's, well, let me get back to that here real quick. Now, and it's the vice versa down here. If we stay down into these ranges, then we're going to have a big bearish day. Okay. Now, if I've been around 65% on this, and you guys know that I've done it before, where the ADD finishes at an extreme, like right here. And what happened? It gaps up. So you could, hey, we're really low. We hence we had a really red day. Right at the end of the day, you might get some calls. Whatever's at the money at the time. Let's say, I don't know, 325s or whatever. It might gap up to 327 at the beginning of the day. Right, and that one day I did that. I right away off the bat I was up, 120% or something like that. One day I think it was up 80%. Or we finished up strong, up here, and then she could gap down also. So these are. Here we go, right here. See, we started up high, and then the next day we gapped down and continued downward from there. So that's something else to keep in mind with the ADD. And then this is the ADSPD. So this is equal weight, right? So this indicator right here is pretty awesome. You have a histogram, and this is the weighted ADD, okay? And this is the regular ADD, right? So the weighted one, if we're coming down here off the, on this break to the downside, you're looking for gaps or a divergence where the tick is moving a lot more than the weighted. Okay, so and when the weighted is far above the regular ADD, you have more confidence in where that move is going. Okay, so like right here, everything, the regular ADD and the weighted ADD were perfectly in sync. But then when you start seeing major gaps like this, okay, the sustainability of that is pretty it's not going to last, because the weighted isn't moving down as much as the regular ADD. So it's telling you that most likely, it's going to be exhausted. And sure enough, the next day, boom, we gapped way up here, right? And also right here, if we see this big downward move, right, the ADD isn't anywhere close to the weighted area. So that's telling you that the weighted part of the market, the Magnificent Seven, all the big stocks, they're really serious about this downward move more than the cheaper, stocks. So what happens? We get a pullback, and then boom, we get hammered down. So that's pretty important to look at also. And then again, the big move down here, and you get a big disparage. Ugh, too early this morning, not enough sleep. Big gap here. The weighted just says no. We're not following you, market, and you get a move back to the upside. So very, very important to be looking at. Again, just day to day. You're looking at, this is again something you want to be looking at. So yesterday, right, we're in the negative territory. And yes, you want to be looking for divergences on this also. Okay, so if the price of the the SPY is going up and this is starting to come down, crossing under, you might want to be careful. Now by this time the SPY is starting to go down, and look what happens. The market crosses to the upside. Okay, on the weighted histogram here. And if you notice what happens right on the break, okay, this is moving down. It's in conjunction. There's really no divergence here. But as we cross over right here, boom, the move happens, right? So that's very, very important to be looking at also. And that's basically it. That's
So Ron,
OLD and the ad. Yeah.
I realize that these are actually tickers, symbols in the Thinkorswim, right?
Yep.
I wanted to find out the additional part to it, like the accumulative. Are those separate indicators that you have to purchase differently
Yes.
to add it to? Okay, I see.
Yep.
So we're not able to really just focus on those tickers by itself to determine.
You could.
You can?
No, the indicator just gives you more information on what's going on, right? But
Okay.
yeah, I wasn't really planning on focusing on that today, but with the ADD, when was it? I can't remember. Well, this is all. I'm just not going to do it right now, but the ADD is really important because you get down to like the 3 minute. Now here's the thing with it. You go to the 15 minutes, you're not going to read it as quickly, and you're going to miss out. But on the 3 minutes, especially on the open, I thought it was last week, the prior week. Let's say here's the open right here, and the market's going up, but the ADD was going down right at the open for like the first, I can't remember what it was, 6 minutes or so, right? So you're you're thinking about getting puts with that information, and sure enough, what happened is it just tanked. Um, so very very important, and you don't need any indicators, but you have to be able to read and see that something's going on. There's a divergence forming, so um, so you don't necessarily need indicators, and then you can, well, you have to, but my guy might put these on as part of his indicator that he's making for the ADD to find. My guy is making a script to find deviations in the ADD with the market. But all these lines I just made by hand, just prices. You just set up your price at 2,000, 1,850. You could color it whatever you want, green and red down here or whatever. And then all these that I have on here are major support and resistance areas. Where I've seen certain moves stall and things like that. Just to give me ideas of what's going on. Like, obviously the zero line is extremely important, but see, we came down here, we broke through this one, but see, it respected it, came down, respected that area. So if I'm in puts, I'm going to be paying attention to the ADD to see, what's going on, right? I mean, and I set these not just on the day, for today. I got these going back from 20 day 15-minute mark or something like that chart, and I set these for based on that chart, and just look at this right here. Boom, came up, hit that support, came down. So it's important to mark up your chart, right? So here's the 20-day 5-minute. So I'll come back, and every now and then I'll go, well, okay, this is a pretty major area right here. So I might move that up, and then recent areas, like here, I just put this on Wednesday right here, right? And so you can mess around with, just like on any other chart, your support and resistance lines, okay? And not just, okay, here's a high here, but I look back and see, oh, there's a lot of fighting in this area also, right? So that's an important area right here, and see it hit here also. So mess around with it, but pretty important stuff. And you could do all that without any indicators on it at all. You can get all that information, and it's all very useful without any indicators. Matter of fact, there aren't any really indicators for the ADD. We're just getting one. So.
Okay, I was going to ask you, I believe you might have said it already, but for the intraday, using the tick and also the ADD, the time frame, is it better to use on the 1 day, 3 minute, or 5 minute?
Well, again, the tick is just for the daily, right? The intraday. So whether you use the 15-minute on the day on the intraday trading or whatever, some guys just like taking out a lot of noise and they use the 15-minute, right? And some go down. Some might, again, it's just like regular trading. Some guys just like using the 15-minute and it takes out a lot of noise, and some guys, boy, they're just They got the 1 minute, 1 minute chart, and they're scalping and they're celebrating a 10% move. But
Got you.
yeah, so the tick, but no matter what, in context, the tick is just for intraday trading. The ADD, again, is for intraday trading, but you could glean more information off of that from prior days to get support and resistance lines up here. Okay, but no matter what, these numbers don't change. The 2000, the 1800, the 1500. Right? Why do I have that set to that? That's weird. There we go. So these are the big areas. And then of course when you're hovering around the 0 mark, see there's sometimes it just hovers around here, and you just kind of want to stay, you're ranging, you want to stay away from really trading with the understanding that I'm going to have a big move. Then you really are. When I start seeing it do that, then I am, if I want to, I'm scalping on the 1 minute chart, and I would be very happy with 5-10%, type of thing. Or you just don't trade that day if it's just ranging again, because it's even for experienced traders, when it's ranging, it's just it's a pain. It's difficult. It's not easy. And then again with the weighted, with the weighted, you just have your 0 line that you put in, so you don't need that indicator. But it's nice to have the volume, the histogram for the weighted, and the cumulative tick on the VOLD. Pretty important. So I think where I got the cumulative tick, yeah, that was from the Trade Brigade. So you could go on their website, and they have a bunch of pretty decent indicators on there. So that's called Trade Brigade, and you just look for the cumulative volume.
Okay.
And that's for the VLD. Yeah, well, okay. And then for the histogram, on the weighted, let's see, edit sources, here we go. That was from Shadow Trader. And you can get that from Shadow Trader. And I'll put those links on later. Now the videos that I'm thinking about posting, and I am, if you guys just want to get a head start and everything, I just want, for other reasons, but the Shadow Trader is they have some videos on trading what they call the quad, and very, very, very good videos on how to use the indicators. So,
And the cumulative volume was by, I'm sorry, By who?
Shadow Trader.
No, that's the one you're talking about now. But before you said look up the cumulative volume on
Oh,
what
the Trade Brigade.
Favorite. Thank you so much.
Yep. And they both have YouTube videos out on this. And then the other one that has very good information and examples and things like that of how to trade scalping this system is on let's see if I can find it here real quick. Hurry. SMB Capital. That's Sigma. Wow, I forgot my M. Sigma Mike Bravo, right? Capital. And they have a 2-part series on, and it's literally labeled "How to Use ADD Tick to Make Winning Spy Trades" in the SPY. Very good information, and I'm gonna be putting those in the education thread. So.
Thank you very much, Ron.
Yep.
I have a question about that McClellan oscillator. You said not to use it for the SPY. What do you?
You can, but it's pretty much made for just the New York Stock Exchange. It reads better because that's what it's made for. And I talked about it yesterday, where if you were waiting for the divergence on the daily for the SPY, you missed out on the bullish move by waiting for it to come down to hit the support one more time before it came up, where on the New York Stock Exchange it perfectly hit the divergence support and then it ripped. So yeah, you can use it. What do I have it on here? So here's so here's the McClellan right here, and so see right here you had this kind of mini divergence right here off the main divergence, and you saw that, and you're in right there, where the SPY it was still kind of coming down here. So, oh no, okay, this was the SPY. So you're waiting for it to come down here, even though there was a mini divergence, so that might have tipped you off right here. But on this day here, you're like, well, we're still coming down. It's going to come down here again, right? Where here it perfectly hit this divergence and boom, right? So the SPY intraday trading, let's look at a bigger 50-minute, it looks like this, so when it's down here, you're like, you miss that move right here. Now obviously once it breaks out right here, you might get in right here, and then all of a sudden you're like, oh crap, I got stopped out, and then so I'm done with this, and then it rips, right? Now the thing is with this, now this is all pre-market stuff, so that doesn't matter, but right at the bell, you could have been looking, it's like, well, the McClellan's just still going up, right? And if you're conservative, okay, it breaks the zero line, well then, you could have gotten in right here. but it's pretty wonky, right? So you come down to like the 3 minute. Here's again yesterday. You know, this is staying below the zero line, right? This is still, oh, it's above the zero line, but it's continuing downward. So what kind of information is it really giving you? It's not, because it's not for that purpose. On the daily, it does, you know, quite well. Like right here, you have this big divergence pattern here, right? Right here, boom. If I remember, no, right here, big divergence pattern right here, boom, boom. A little late though, right here, but you know, it's telling you it's going up, but there's no divergence. But you know, you play it after it. It breaks the -2, which is your oversold territory. You know, it help you to come up. But you know, right here, it's like, oh, we're overbought. We're going down, but this continues to rise, right? But then you see this divergence here, and it gives you a little rundown. But here, you know, you miss. You're waiting for it to get into oversold territory, and it doesn't. So, yeah.
Thank you, sir.
Yep. But you know, if you're using it, you know, for the daily, why just don't use it for the SPY? Just go use it for the, you know, NYA. You know, so this gave you the divergence pattern right there. Boom. Divergence right here. Boom. On the SPY, it was down here. Here, you're still well above the. Here, you kind of, you know, went below the zero, but then boom, above zero, you're in. Boom. Now here, you're starting to, you know, look at the MACD. We're still positive, still positive, still positive. So you know, you could be hanging in here on the daily, but then this, you know, back in July, this is when I says, guys, you know, we're going to be going down, right? And there's the 3,000% day that I missed because I had lunch with my aunt and uncle. I'll never forget that day, July 27th. And then there's the big move down. And McClellan just doesn't lie. So that's how you play it. You use the McClellan for the NYA on the daily chart as gold. What else, guys? I got around 10 more minutes.
That link you put up there, the first one, it's broken. It didn't work. The fair value gap. I don't know why, but it just says incorrect when I loaded it up.
I put a link in the chat, Granny.
Oh, is that the same thing that he put on?
I believe so.
Okay, thank you.
No problem.
That's interesting, really.
Yeah, it was broken for me
no,
too. But
Granny, that's not a link. Fair value.
I mean, for Thinkorswim, you loaded into Thinkorswim, right?
Yeah, just
yeah, it wouldn't work for me either, though.
no.
It said it was broken.
I was trying to change everything. Maybe you left something out, but it wasn't that.
Share. KKR. Oh, that's weird. Let's see. Oh, okay. Yeah, you can't use the HTTP colon. You just start from the TOS dot.
Oh, okay.
Yeah, so if you take that out, it should work from there. Let me know if it works, else I'll just take it down.
Check right quick.
That's weird because I think I gave it to P and she didn't tell me it didn't work. So
Well, she may be smarter than we are and just know. You don't put that in there.
huh? Yeah, it gives me a page not
It didn't
found.
work. Yeah. Now, if it's a paid one, they may have put something in there that you can't, so that you can't share it.
Yeah, I
Some of them
thought
are
this
doing
one was
that.
free though.
It's free. I checked the code when you brought it up. It's from the
Yeah,
same person. Samer 800.
was it from Use Think Script?
Yes.
Yeah, okay.
The link's in the chat though.
Yeah, I'm
You know how to paste the code, right, Granny? When you do the create button.
yes,
Okay.
that old
Yeah,
goofball.
if you just take out the HTTP, colon forward slash, and you just start from the TOS, copy that, it should
It
work.
didn't work. It didn't work when I did it. That just did that too.
That's interesting. It could be because Thinkorswim updates on Saturdays too. There might be something wonky going on with
Oh,
that too.
yeah, that's probably it.
Because I've never had a problem sharing those before. So, um, yeah, that's about it. Anything else, guys? Um,
This is recorded. Sorry, this is recorded right on, or
yeah,
I should say stream. Okay, perfect. Yeah, I like to rewatch them.
yeah.
Yeah.
This is another one that I really like. I took the RSI out of it. It's an RSI. It's called the Hot Zone RSI. Um, and you're looking for big, um, you know, I you basically you're trading off the volatility. So when the volatility's really high, um, you're looking for a bearish move. But then when you get down into these levels, that the volatility is just nothing. There's nothing there, and that's a big move up. Now you see these lines and everything right here. This is when volatility is really low or really high, and the RSI is in oversold territory, extremes. You start getting these red lines right here, and the yellow ones are kind of like warning signs. This is where you typically get a big move to the upside, and if you notice right here, she just rips. So same thing right here. Volatility is really high, yet you're getting a big move down. And then you have a lot of ticks. Now, a lot of this stuff happens after hours, unfortunately, but it takes a lot of patience to use it. Here we go again. Volatility's starting to rise, right? The RSI is way up here. Boom. Right? And then when the volatility gets super high, and by that time the RSI is down here, and you get the warning sign, and here you get a buy signal. Boom. She rips up. So that's interesting too. I like that indicator. It's tempting to, these are sell signals, right? But a lot of the times, sell, and then it rips up more. But you always be careful of those things. You really want to wait for this right here. Matter of fact, I played that move. I remember that. I played that to a T. What else, guys? The harmonic did not play out. Well, actually it did. It came into the reversal area, came out and got up to the second target, and then she just tanked. So, but I'm going to be keeping tabs on this. So because this is the reversal area, so we start climbing back up to 1480 and we break out of it, we could run up to 1510, we could run up to 1572. That would be a big down day on the market. So we finished at 1320. We finished awfully high on the ADD. So I did not buy puts for Monday, but we'll see how that plays out Monday and see what happens if we gap down, or we just start high again and start moving up.
Right, because after hours on Friday, yesterday, we got something from Moody where they we got a downgrade on I think it was the economy.
Okay. Well, we'll see what happens. Got that ghost wick down here. Want to pay attention.
Yeah, that's what
to
I was
those.
looking at too.
Yeah. Now, again, these could be filled a month from now, right? But you always want to keep in mind what's been going on with them, right? Ghost wick down here, just the next day fills. Ghost wick right here on Wednesday, boom, filled. Ghost wick right here on Thursday, boom, filled. So recently the ghost wicks have been being filled within the week, actually within the next day. So yeah, we want to keep an eye out on 434s. The way things are going. Again, I'm not a financial advisor. This is just my opinion, blah, 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 blah. But the ghost wicks have been filled, within the next couple of days. So again, though, prior performances do not indicate future, events, but we'll want to keep that in mind. And now we got it on video, so we'll see if it is fulfilled this week or not, and then you all could say, "Oh, we knew about that Saturday."
Yeah.
And since I don't have puts right now, watch it go down there. And
Or we can look
Despite
at
all
it Monday. Or we can look at it
yeah.
Monday. Yeah, and see,
well,
if it
yeah,
keeps
yep.
gapping
If
up, and we can look at swings.
the market's going
Maybe,
down,
maybe.
what do we have? Funny, it came right down to the daily channel right here, and it did actually perfectly hit the sigma for the day. Now this is for Monday, right? It didn't move that far up, but this is I think this is the second sigma down. Woo! So yeah, that'd be awesome because that would be probably like a 1,000% move. Again, depending on what happens pre-market, pre-market we could be down here already. Who knows? But yeah, it looks kind of interesting. I'm going to move this just a little bit. My 15-minute chart, I think I'll have right there. There we go. Yeah, big trading range. Woo! From right here up to there. It could be nasty. We could come down here. We could start up going high, and then coming back down to mitigate this move right here. So, we could, who knows? We could theorize all kinds of things going on here. But
What did you say you changed in the configuration? I copied chunks what he put on there and I've saved it. What did you change on here? The color fair value bar or anything current chart time? Do you leave that as no or?
for the fair value gaps,
Yeah, for the where you customize it, you said you changed something.
yeah.
I think it said 15 minutes.
Yeah,
So
it automatically comes to 15 minutes. On mine, it just did.
so
And current
your
chart time is
your chart time. So if you just want the fair value gaps on the 5-minute because you're on the 5-minute chart, or if you're on the 15, you want the fair value gaps for the 15. You use chart time. So you go yes. But now, like for me, if I want the 15-minute aggregation fair value gaps on my 5-minute or the 1-minute or whatever, you just turn that to no, and you come to the aggregation and you move it to whatever you want.
What do you set the threshold percentage at?
Uh, 0.01.
Okay, that was already set in that. Okay.
Yeah, I don't mess with that.
Alrighty,
yeah.
thank you.
Yeah, that's about it. Oh, it already took off all my things there, huh? I think it's And I can't overemphasize. I mean, the yesterday's close anchored VWAP. It's just, it's so good, so good. You just right there at around 10 o'clock, it broke right through, kissed it, boom, gone. It's beautiful. Now that's a part of my Brian Shannon's script that you get from I can't remember the name of it now, but you can do this by yourself on Thinkorswim. You could go on use ThinkScript, or you could go in the Discord, because I posted it before somewhere, and you could get on Thinkorswim for free a script for the anchored VWAP. But the thing is with that, you have to do it by hand, and you have to write down, you have to put on there the date and the time in order to tag that. TradingView is so nice. You just hit the icon and you hit the candle and boom, it shows. It's really nice. But this script automatically does it for you. So you could do this yourself. You just go to yesterday's close and you put the anchored VWAP on there for the date and time, and boom, there it is. And I have mine nice and bright yellow because it's important. And then for me, now it won't show up because I just have the last 2 days. But then when I go to the 20-day, now I don't think I have the monthly anchored VWAP, but this right here is the weekly. So it goes back to that Monday, and it anchors it right from the open. And you can use that once it breaks, boom. Came down, broke below it, but then we came back up, broke below it, boom, broke above that, boom. And I think I did get shorts right off the bat here because I saw it break down below, and I thought, well, maybe, but then got stopped out, and then made this big run up. Beautiful, right up fair value gap. Funny, right on the weekly. Came back down, rip. So those are other things that I use, just more information, right? I got my ticks, I got this, I got the volatilities just staying low. We break above the weekly anchored VWAP. We're above the yesterday's close VWAP right here. Good to go. It helps. And then of course your channels, right? So with that said, guys, I'm gonna get running here. So
A quick question.
Okay.
If before you go, the money line, do you know how that is set? Like, do you want to set that on the daily? I know it does it automatically for you.
Yeah.
But like the daily with the most volume maybe recently, or I'm a little confused on how I should plot that on TradingView.
Well, see, on TradingView, you have to do it individually.
Yeah, I know that.
Right. And because their charts are different than, on Thinkorswim, there's a set date that you set. The yearly, it goes back a year, right? 20 days, it goes back 20 days. TradingView, web-based, PineScript, you could just be on the minute chart and pull up the last 6 months if you want, So it depends on how you want to set that up. You could
For the
set
money
up,
line though, for the money line specifically though, would you want to just look for like the day with the most volume and set it to that then?
for the daily, yeah.
Well, just the money line and well, okay, I guess the money line probably gets set on whatever time frame you set, right? So it changes, right?
Yeah.
Or something like that.
Because
Okay.
if you're just looking at the last month, right, the last 20 trading days, your money line might be, up here, but on the daily it's going to be way down here.
I see. Okay.
Because the 1 year daily, the money line might be anchored to last March, and if you're looking at just the last week, well, then it's going to be somewhere just within the last 5 days.
So setting the money line on TradingView is more or less a hassle in a way, then I guess.
Yeah, this is kind of weird. Where's this is really odd. Oh, last 2 days. That's why. Okay, so the money line right here. This goes all the way back to March, and there it is. You come down to the last 20 days. It's down here. So it's not even on the chart. We're so far above it. So
Okay, thanks.
yeah.
That name was Alpha Trends, I believe, that you were trying to think of for the VWAP on Thinkorswim.
Yeah, I think that there's one link that I keep on sending people to, and they're like, it's not on there. So if you can't find it, let me know.
Yeah, I think you found it pretty easily by just Googling it.
Okay.
I saved the bookmark. I have it in case anyone needs it. I can throw it in the chat.
Did you go on Alpha Trends and find the actual where you buy it, where it says
Yeah,
click here to buy? Okay, all right. It
yeah,
is on Alpha Trends. Okay,
yeah. Well, you found it, and I just bookmarked it.
okay, all right. So, all right, here, yeah, here's the monthly in red. So this is the monthly anchored VWAP. And here the blue one is the weekly. Now, of course, on Monday, this is going to disappear. Okay. So I used to, like right here, 436.35, this is where it is at the end of today. And I would, I would put a price tag on there right here. And then I would edit that. Oh, funny, it's right on the second sigma down. Very interesting. Okay, so I put the weekly or last week's anchored VWAP. And since I have the anchored VWAP as a darker blue, I put it on there. And so there it is right here. And then Monday, this is going to disappear. And let's say we start up here, then that blue VWAP is going to be up here. And, going down or going up, something like that. And I'll leave that on there just for fun. Get a little bit more accurate there. There we go. With that said, well, before I go, anybody get into those Apple calls with me? And Granny had some too. She got in well before me. So, still in them. I think I'm up 245%, something like that. I got the 190s. So that would be really nice if we, we're way above the monthly though. This blue dotted line is another anchored VWAP to the lowest candle on the chart. So the last month, it's been doing quite well.
Did you get it for next week? 2 weeks out? Is that what you did?
I got
Mine
them.
was
I got them for the 17th.
okay. So you got them for next week.
Yep.
Okay.
I made some money just off, regular, not options, but I'm excited about getting into options. That's for sure.
Yeah. Well, you could make a lot of money off them, and you could
Right.
lose a lot of money off them. So,
Thank you for everything.
so they close right here. So I'm really hoping we have a good couple of days here. I'm a little. I was busy, so I didn't get to look at it. Friday, I might have gotten out right here because we're right at a resistance trend line here. So that's a little. It's gonna be a little scary Monday. I'll either lose a lot of potential profit or I'll, be sitting pretty. One of the two. So, and look at the money line on the daily chart. Look at where we went to. And here's the lowest candle anchored VWAP, this blue dotted line, rejected right there, broke through it right here a little bit, but then hit the money line, boom. Came back down on this day. That was the low for the day, was off of the low anchored VWAP. Now the good news is here, this red dotted line, this is an anchored VWAP to the highest candle on the chart. And we just smashed right through that. So that's very, very bullish right here. So that's really good. Now here's what I was telling you about before. Anchored. This is the Thinkorswim anchored VWAP script, and this is what I'm talking about. You have to set the year, month, and date, and then the time. And for some reason, I have that set to something. I don't even know where it goes to. But I have it set to March 24th. So about right here for some reason. Something happened March 24th. I don't know if it was a FOMC day or something like that. I have no clue. But I'm going to take that off because it's kind of pointless now. So yeah, this should be interesting. See what happens here. On the daily, let's see where that went to Fibonacci wise. 38% is kind of the bare minimum that you want to see, because it's such an epic run. You really want to see it come down to the 50%, where it really has a good rest, a good back test to prepare for another big run. 38.2 is kind of the bare minimum to have a decent run, but I don't think we're going to have a run like this. It just didn't have enough rest to have an epic run back up. So, and I told you guys about that analogy before. This is a marathon, comes down like this far and starts ripping again, is probably not going to go up much further, because this is like a marathon and you took 2 days off and then you try to run another marathon where you have enough time off, 50 down to this area. That's like you ran a marathon, you have a good 3-4 months off, you're ready to run another one, right? Comes all the way down here. You're, you took 2 years off, and eating cookies and stuff like that. You're not in that great a shape. Most likely, you're not gonna have that much of a run up. That's kind of the idea as far as that's concerned. So. And again, some people trade it this way. And here's the reversal zone right here. And that's it. So and now I gotta get going, guys. So take care. Have a good weekend. Like I say before, get away from the stocks for a while and clear the cobwebs out and get ready for Monday.
Alrighty, you have a good weekend too. Everybody have a great weekend, full of fun.
Bye, you guys.
Okay.
I
Good
see
weekend.
ya.